Robert Schein is Chief Investment Officer, Blanke Schein Wealth Management joins me now. Robert, great to have you back. Thanks so much for being here.
Great to be with you.
So, Robert, the market keeps hitting fresh highs thanks in large part to the AI trade. What's your view on AI right now, and what do you think the market is still misunderstanding about the trade right now?
A lot has been talked about the AI trade. Is it real? Is it not? Is absolutely real. The question is, what inning are we in if we're talking about baseball season right now? I believe and we believe that it's still in the national anthem stage versus the first, second, or third inning. So that puts us back to more opportunity across the board, even outside the AI trade. AI specifically is going to add so many efficiencies across corporate America. It's not even funny. I don't think that what the misunderstanding is right now, to be honest with you, is not only the investors, but even in corporate America, is actually has a great comprehension of the efficiencies that's actually going to create. We saw this back in the late 90s. And I think we're here once again. And that's why we're seeing markets so strong. We're seeing the AI trade so strong. I believe that's going to continue.
But is it still early innings for winners like Nvidia and Alphabet? If investors still aren't invested in those names, is it too late?
It's actually not too late, believe it or not. We just have to watch and pick and choose your spots in terms of when you get into these names. Like earlier this year, we had the first quarter, the S&P gave back, and all these names were, definitely sold off. We added to for some clients that didn't have exposure to that. And that's what investors should actually do, as if the market is just be patient. When the market provides opportunity, continue to add to your portfolio for the AI trade.
And we aren't seeing all of these names actually as winners within the AI space. A lot of the software names are big losers so far this year. So what's the market misunderstanding with software? And do you think it's actually creating opportunities in some of the beaten down names? And which ones?
Yeah, software like ServiceNow, and some of the other CRM names that we're seeing, those are going to continue to work out. SaaS is going to continue to play out and basically play a catch up. You're going to need the software overlay on top of not only just the chip demand that we're seeing. And I know that software has been hit specifically in the last 6 months. But I think if you watch some of the earnings reports, some of these software companies, they're making a tremendous comeback, and that comeback is real.
If investors look beyond some of the obvious AI names, where should they be paying more attention to right now?
Some of the other sectors, actually, if you look at the S&P 500 after the first quarter just reported, outside of tech, which had tremendous growth, double digit, 28% growth on the tech side, you also have to look at consumer discretionary. That was the second leading sector in terms of growth, which is counterintuitive with regards to all the geopolitical that we've had, higher oil prices, higher interest rates. The consumer is actually staying very resilient and hanging in there. So consumer discretionary is a space that investors should take a look at. It's continuing to stay in there and continuing to produce pretty good opportunities.
Last time we spoke, you actually said you expected leadership to broaden away from tech, although right now it seems like we're seeing a pretty concentrated market. Are you standing by that call? Do you expect to continue to see a broadening out?
Yeah, the broadening out in the S&P 500 earnings in specific sectors, the other 10 sectors, if you will, we're seeing that across the board. We're seeing efficiencies that who knows if it's AI efficiencies or just quality management in other sectors. So outside of tech, yeah, it's really encouraging underneath the surface of the S&P 500 to see this rally actually be legitimate, which it is. And we're seeing all of the earnings, all of the tech, outside of tech, if you will, continuing that trade.
So your S&P 500 price target at year end is 8,000. What is it that gets us there, and what's the path going to look like?
Yeah, the 8,000 number is, who knows if we hit it before December, but there's a high probability that we will. simply because the momentum is real. Again, like I said before, outside of tech, the broadening out, other sectors are participating, a lot more efficiencies in businesses, great management, high quality across the board. And you're seeing other, sectors like financials, even healthcare are participating, which is a very positive sign for the markets overall. So that's how I see we can see the S&P getting there.
What's the biggest risk that the market isn't pricing in right now with stocks near all-time highs?
The biggest risk for the market right now is inflation reemerging. I think that's the risk on or the concern on the Federal Reserve side, right? They have a June meeting coming up, a new Fed chair, where whether he wants to lower interest rates or not, we're going to have to watch the labor market, number one. And number two, watch the inflation. Is inflation basically entrenched within all across the economy? And is it just one time inflation that's going to hit the consumer with regards to oil prices because of geopolitical issues? Or do we have higher interest rates for longer? That's the biggest concern for the market right now. And underlying that is the inflation concern.
So we already saw that uptick in inflation with the CPI and PPI report, which will likely, show up in the PCE report that we have on tap as well. So how much could that spook the market? And do you think it could provide a downturn? And would that be an entry point then?
Well, it's going to take a couple of just outside of just one day or 1 month reading on inflation to actually show us if inflation is still going to be the boogeyman, if you will, moving forward. But I think businesses have been very efficient. Most don't really talk about this, and I think we've seen this play out more and more. COVID, what we went through for all companies was actually probably the best thing to get us to where we are today, simply because of the efficiencies that we're seeing across every business channel and across every sector. And I think right now, companies are doing a lot more with a lot less, and that efficiency is really the key. So, is it inflation? Is it being passed on to the consumer? A lot of companies, in fact, if you look at the S&P 500 right now and look at the cumulative earnings calls, if you will, which we do for our clients, inflation wasn't the number one question moving forward or even brought up in the earnings reports when these companies reported. So it's sort of subsiding a little bit from S&P 500 companies, and they are really dealing with how volatile the economy is, but how quickly they can adapt to it.
Okay, so before we get into some of your top stock picks, what is the strategy then for the everyday retail investor, given the risks, but also given where markets have already run? What should they do now?
Well, like for us, with our investors, we always keep dry powder. We always keep cash on the sidelines. Obviously, it's earning 3.5%, 4% while we wait. But for investors, it's important to be patient. We always know that the news cycle, the business cycle, and everything could change in a 24-hour news span that we're in right now. So there always is going to be an opportunity if you have dry powder. So we always keep maybe 5 to 10% on the sidelines for great opportunities moving forward.
Okay, so let's talk about some of those opportunities. We asked you to bring some of your top picks here. Palantir is on your list. That's a beaten down tech name. What makes that a compelling story?
Strong leadership. The space is second to none, and they're the leader in the category. Moving forward, they have been beaten down, but I think right now it's best opportunity for investors, given where we are in terms of the Palantir positioning, stock price, as well as market position.
Okay, also on your list, GE Vernova, a power play. This one's obviously already had a huge run up year to date, up about 60%. Why would you still be a buyer here?
Energy constraints, anything from the AI demand is it's an insatiable demand right now, and GE Vernova is in the heart of the middle of that, and they have the ability to take advantage of even not only this year but many years to come with regards to that play.
Outside of tech, you've called Eli Lilly the next Nvidia. Explain what you mean by that.
Well, it's already in the $1 trillion club. I called that years ago. But if you look at the total addressable market for the GLP-1 sort of craze that we're seeing, their most recent, phase 3 trial that was just released in terms of that information for Eli Lilly is going to be the mother of all GLP-1 if pills, if you will. The results are even better than what we see of the products on the market today. And again, the total addressable market is absolutely incredible. Eli Lilly is the leader in that space and will continue to be not only this year but years to come.
Yeah, Eli Lilly up about 16% in May, although only up about 1% year to date. You also own Blackstone. Why do you think private markets still have upside from here?
Yeah, private markets have been beaten up. Blackstone is the leader in that space. And also, you're going to see the democratization of private equity across the board. And so, as we see the democratization, Blackstone will continue to provide opportunities for the individual investor to basically get into that space long term. So, it's priced very appropriately today, excellent management, and long term, it will be a long term winner.
What's a stock or even a sector that you think investors still fundamentally misunderstand today?
It's a good question. Let me think about that a second. I think the stock or sector, if I would look at the small cap sector right now, that's misunderstood at this moment simply because it's in limbo. Are we going to have lower interest rates, which could help and accelerate? This has been the kickstart, stop and start for the last 2 or 3 years. In anticipation of lower interest rates, the mid and small cap sector should actually take off. It actually is catching a bid this year. In fact, the last couple of months specifically. So what is that? What is that? Sector of the economy? What is that sector of the market actually telling us right now? It's telling us that inflation is maybe overdue for basically coming down a little bit. It may tell us that interest rates are going to be lower later this year. And if we do see that, small caps will rise as a result of that. It's been, again, a trade and misunderstood for basically the last 2 years. But we're seeing small caps actually catch a bid. And the question is, does the small cap market specifically know something that we don't, or is it just front running in anticipation of lower interest rates later this year? Time will tell.
Okay, so Russell's up 18% so far this year, outperforming the S&P 500. Do you expect more room to run then for the Russell? Would you bet on small caps from here?
Yes, I would, and simply because even though that they're a leader this year relative to the other indices, doesn't mean that it's done for the year. That just means that it's playing catch up, like I said before, because the last few years it's underperformed relative to the other indices. So, yeah, small caps is something to it could be a material trade not only for the remainder of this year, but multi-year cycle.
Okay, I think this is a great time to transition to our rapid fire game of this or that. Quick questions, quick answers. You've played before. Are you ready to play again?
Ready to go.
All right, here we go. Markets cooling off or more room to run?
More room to run.
How much more room to run?
We can see another 10% from here.
Path to that 10%, smooth sailing or bumpy road?
That'll be bumpy road.
Take profits or stay fully invested?
Trim your overweights and reallocate to your underweights, but stay fully invested.
Buy every dip or wait for a big reset?
I would buy the dip.
Tech leadership, staying strong or broadening out?
Staying strong.
Summer slump or summer rally?
Summer rally.
Midterms, market catalyst or headwind?
Catalyst.
AI winner from here, semis or software?
Could be software from here.
Bigger AI opportunity, infrastructure or applications?
Applications.
One software name you'd buy right now?
ServiceNow.
One you'd avoid?
Ooh, that's a good question. I don't know.
More upside from here, Micron or Nvidia?
Micron.
Tech stock most at risk from AI disruption?
Apple.
Mega cap tech or the rest of the market?
Mega cap.
Small caps or large caps?
Small caps.
One sector you'd avoid right now?
Energy.
One winner you'd take profits on today?
Nvidia.
Best downside protection, cash or hedging?
Cash.
Private credit concerns, overblown or underappreciated?
Underappreciated.
One word to describe this market right now?
Resilient.
Robert Schein, Chief Investment Officer, Blanke Schein Wealth Management. Thank you so much for playing along. I appreciate your insights and your picks.
Thank you.
If you enjoyed this Street Talk, check out our full interview with Ross Gerber, where he explains what could still drive this market higher.